Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman & Wakefield's #1 investment sales team in New York City.
Hi, I'm Jon Hageman, partner at the Knakal Group at Cushman & Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, chairman of New York Investment Sales for Cushman, and today we're going to talk about the state of the land market. We've started to see some stresses in the land market over the last 6 months in particular. Tell us what we've been seeing.
Hags, the land market is so important because, as you know, it's a leading indicator of where the market is headed. Land values are very representative of the way market participants view the market 2 or 3 years from today, because if they buy a site today, that product is going to be delivered 2 or 3 years from now. And so what we started to see mid-third quarter of last year is that folks were starting to pull back a little bit in the land market. The condo market wasn't functioning the way people would have liked to have seen it. Construction costs were going up. There were delivery delays for different materials, and a combination of all those things, in addition to financing becoming a little bit more challenging for land, led to a dynamic where we've seen downward pressure on land values recently.
So now that the first quarter numbers are in, what do those look like specifically for land?
Hags, the broader market, we saw a reduction in the number of properties sold in the first quarter of about 7% from last year's pace. The dollar volume of sales was down 25%. And while those percentages are tangible, they pale in comparison to what we've seen in the land market. In the first quarter of 2016, there were 117 development sites sold in New York City. If that is annualized, we're on pace for about 468 for the year, which would be down about 26% from last year's total of 630. And the dollar volume of sales was approximately $2 billion. If we annualize that at $8 billion, we'll be a whopping 45% below where we were last year. And I believe that those statistics are even rosier than the picture will ultimately be for the year in the land market.
Bob, why do you feel that way?
Well, because a lot of the land sales that closed in the first quarter of this year had contracts signed before we really started to see these stresses in the market. So those transactions are really more indicative of what the market was like 3, 4, 5 months ago than during the first quarter.
So you talked about the end user condo market specifically. How is that particular factor affecting the market?
Well, clearly absorption of condo units is not at a pace that folks would like to see it. And I think there's a big difference between new construction versus the resale market. From the residential brokers that we talk to, and as you know, we talk to a lot of them all the time to figure out where the market's going, it seems like the resale market is doing much better than the new development market is. And that could be because of the aggressive pricing in new development. It also seems that the much larger price tag units are moving more slowly than more modestly priced units. And then you have to take price per square foot into consideration. So there's a lot of things that go into why certain projects are doing better than others. But I think generally what we're seeing is that the market absorption is not at the rate that the market would like to see.
So taking all these factors into consideration, is that affecting all locations and all types of land?
Well, not everything. Clearly, the most well-located properties and the projects that are unique or special in some way are still hanging in there very well. It's the more pedestrian, average, cookie-cutter type of development that is really being most adversely affected. And I think that the larger transactions are probably more challenging to put together because of the massive amount of equity that's required for those. But all in all, I think if you have a good sponsor with a good site and that's very well located with some unique aspects to it, I think there's still tremendous demand for those sites, and they will continue to sell. In summary, as we enter the second quarter of 2016, we see that land sale activity in New York City in the first quarter of the year faced some challenges. Both the number of transactions and the dollar volume of sales dropped significantly. While we expect this trend to continue, it's important to note that the best sites in the best locations are still commanding tremendous demand and strong pricing.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.